What if the rulebook for building wealth has been secretly rewritten? For generations, the path seemed clear. Get a good job, buy a house, invest in the stock market, and retire comfortably. It was the blueprint for a secure life, etched in stone by our parents and grandparents. But for many of us, that blueprint feels like a faded map leading to a place that no longer exists. You save, but inflation eats it away. You invest, but the market feels more like a casino than a safe bet. You work harder, but the goalposts of financial freedom just keep moving further away. This isn't just a bad economic cycle. We are living through a quiet revolution, a seismic shift in what it means to be wealthy. The very definition of an asset is expanding beyond what can be traded on Wall Street. We're talking about digital real estate in virtual worlds, where people pay real money for land that only exists as code. We're talking about owning a piece of a creator's success, not just by buying their merchandise, but by investing directly in their career. It's a world where your unique ideas, your skills, even your online identity are becoming tangible, valuable assets. So, in this video, we're going to tear up the old financial map. We will dissect why the time-tested strategies of the 20th century are failing us in the 21st. We'll explore the strange and exciting new frontiers of wealth from decentralized finance, which aims to make you your own bank, to the creator economy and the immense value of human capital. Decentralized finance, or DeFi, is a system that uses the technology behind crypto to offer traditional banking services, like loans and interest, but without the middleman, giving you more control and potentially higher returns. This isn't about get-rich-quick schemes or chasing the latest crypto hype. This is about understanding the fundamental rewiring of our economic world and learning how to build a resilient, multidimensional portfolio for a future that looks nothing like the past. Most of us grew up with a very specific image of wealth. We think of dusty stock certificates, the solid weight of a gold bar, or the deed to a piece of land. For decades, this was the gospel of financial security. The bedrock of this belief was simple: a diversified portfolio of stocks and bonds, managed wisely, was the one true path to prosperity. It worked for our grandparents. It worked for our parents. We've seen the charts, we've heard the stories of patient investors who turned modest savings into comfortable retirements. But look closer at that foundation today. Feel the hairline fractures spreading beneath your feet. That safe 2% return on your savings account? Inflation, the silent thief, is running at a much higher rate, meaning your money is actively losing purchasing power every single day you let it sit. That balanced 60-40 portfolio of stocks and bonds, once the gold standard, is struggling in a world of near-zero interest rates and volatile markets. The strategies that built the wealth of the baby boomer generation are hitting a wall for millennials and Gen Z, who face a mountain of student debt, soaring housing costs, and stagnant wages. The promise feels hollow. The math just doesn't add up anymore. But what if this isn't a failure of the system, but a signal? What if the very nature of value is undergoing a fundamental transformation? To understand this, we need to look at our financial world through a new lens: the concept of trust. For centuries, our entire economic system has been built on centralized trust. We trust banks to hold our money, governments to issue our currency, and stock exchanges to facilitate our trades. But what happens when that trust begins to erode? Let's re-examine that savings account. You put your money in, trusting it will be safe and grow. But now, with inflation as our new lens, we see it differently. The bank is safely holding your money while a force outside its control, a force controlled by the very government that backs it, is systematically devaluing it. The perceived safety is an illusion. What looks like a safe harbor is actually a slowly sinking ship. And this is our first major realization. The greatest financial risk today isn't volatility. It's the silent, guaranteed loss disguised as security. Now, If the old world of assets is cracking, where is the value flowing? This brings us to a place that feels like science fiction. Imagine buying a plot of land. Except this land isn't on a street. It's in a digital universe called the metaverse. People are paying hundreds of thousands of real dollars for it. Think about your favorite artist or YouTuber. Instead of just buying their merch, what if you could buy a token that gives you a tiny share of their future earnings? This is the creator economy. We're witnessing the birth of entirely new asset classes, digital real estate, tokenized art, intellectual property that are completely untethered from the old financial system. It feels chaotic, speculative, and to many, completely insane. This is the great twist. The very things our parents would call not real pixels on a screen, digital contracts, online communities are generating very real wealth. This shift shatters the old paradigm. It forces us to ask a terrifying and exhilarating question. If a digital address can be more valuable than a physical one, what does value even mean anymore? To answer that, we have to look deeper, not at the assets themselves, but at the revolutionary idea powering them all. This isn't just a random explosion of digital speculation. It's a direct response to a generation that feels the traditional system is rigged against them. It's a search for a new frontier, much like the gold rushes of the 19th century or the dot-com boom of the 90s. It's chaotic, dangerous, and filled with pioneers and charlatans alike. But at its core, it is driven by a powerful desire for ownership and control in a world that seems to offer less and less of it. This isn't just about making money. It's about building a new system from the ground up, one that doesn't require you to ask a banker for permission. But I know what you're thinking. This is all a massive bubble. It's gambling, not investing. What about the tried and true method of just buying a low-cost S&P 500 index fund and holding it forever? That strategy has outperformed most experts and seems to refute everything you've just said. And you're not wrong. That strategy has been a cornerstone of sound financial advice for a reason. Let's deconstruct that virtue, however. When you buy an index fund, you are making a powerful bet on the continued growth and stability of the American corporate and financial system. It is an act of faith in that centralized model. But as we've seen, that system itself is showing signs of strain. By diversifying only within that system, you're still concentrating all your risk in one basket, the basket of the old world. The true redemptive power of that index fund is entirely dependent on the health of the very system that is now being fundamentally challenged. So our second, aha, moment is this. Even the safest, most logical investment of the 20th century is, in reality, a high-stakes bet that the future will look exactly like the past. Its greatest virtue is tied to its greatest and newest vulnerability. So let's piece this mosaic together. We began with the comforting story of traditional wealth, only to see it being eaten alive by inflation. We then plunged into the chaotic, vibrant world of new digital assets, realizing they are a response to a deep-seated erosion of trust. We even challenged the safest of old-world strategies and found it to be a concentrated bet on a fading paradigm. The true breaking point, the moment of undeniable change, is when you realize that standing still is now a financial choice. Doing nothing, following the old rules, is no longer the safe option. It is an active decision to ignore the biggest shift in value creation in a century. Now that we understand the decaying foundation of the old world and have glimpsed the architecture of the new, one question remains, a question that changes everything. We've talked about digital assets, decentralized systems, and new forms of ownership. But what is the one asset that underpins them all? The one you already possess, that has the greatest potential for appreciation in this new economy?